Florida's housing market was once unstoppable, but now it's drowning. Here's why it hasn't sunk more of the state yet. For years, it seemed like nothing could slow down the Sunshine State's real estate boom. Prices soared, investors flocked in, and new developments popped up faster than palm trees. But then the cracks started to show. Rising insurance costs, sky-high property taxes, and a wave of climate-related risks began to weigh heavy on homeowners and buyers alike. Yet, despite all this, Florida hasn't seen the full collapse some predicted. Why? Because the state's economy is still holding strong. Jobs are plentiful, wages are rising, and people keep moving in. Plus, lenders haven't pulled the plug yet. Banks are still offering mortgages, and investors are still betting on Florida's long-term appeal. But the question isn't whether the market can stay afloat forever. It's how much longer it can tread water before the next big storm hits. The Florida housing market was on fire, literally and figuratively. For 30 straight months, prices didn't just climb, they skyrocketed. A modest bungalow in Miami that once sold for $300,000 was suddenly fetching double that, sometimes more. Investors flooded in, snapping up properties sight unseen, flipping them before the ink on the deeds could dry. It was a gold rush, but instead of pans and pickaxes, people were armed with pre-approval letters and dreams of easy money. Then came Hurricane Erin. It didn't just hit the coast, it tore through the state like a wrecking ball with a grudge. Entire neighborhoods were flattened, and the ones left standing weren't much better off. Roofs peeled back like sardine cans, streets turned into rivers, and the power grid blinked out for weeks. The market didn't just cool down, it froze solid. Buyers vanished overnight, and sellers who'd been riding high suddenly found themselves underwater, and not just from the storm surge. The boom had been a mirage, and the bust was a reckoning. Banks tightened their purse strings, foreclosure signs sprouted like weeds, and the dream of Florida as the land of endless opportunity? Well, it was still there, just buried under a mountain of debt and a whole lot of waterlogged drywall. The housing market in Fort Lauderdale is taking a serious hit right now, and it's not just a slowdown, it's a full-blown collapse in some areas. Buyers who were once eager to snatch up properties are now backing out left and right, leaving sellers scrambling. The numbers don't lie, cancellations are surging, and home sales have plummeted. A lot of this comes down to rising interest rates. Mortgage costs have climbed so high that many buyers simply can't afford the homes they were eyeing just a few months ago. And it's not just first-time buyers feeling the pinch, even investors are pulling back, waiting to see if prices will drop further. Then there's the insurance crisis. Florida's already high insurance rates have skyrocketed, making homeownership even more expensive. Some buyers are getting cold feet when they see the numbers, realizing the dream home they wanted is now a financial nightmare. Sellers who were counting on quick sales are stuck with properties sitting on the market longer than expected. Some are slashing prices just to attract interest, but even that's not always enough. The market's shifted, and it's a tough pill to swallow for anyone who thought they'd ride the wave of Fort Lauderdale's hot real estate scene. So what's next? Well, if rates stay high and insurance costs keep climbing, we might see even more cancellations and fewer sales. It's a rough time for the market, and no one's quite sure when or if things will bounce back. So here's the deal with the insurance crisis. It's hitting hard, and it's hitting fast. Over the past year, 6 major carriers have gone under, leaving thousands scrambling for coverage. And the ones still standing? They're hiking premiums through the roof. We're talking double, sometimes triple what folks were paying just a couple of years ago. Why is this happening? Well, it's a mix of things. Claims are piling up, natural disasters, lawsuits, you name it, and the costs are outpacing what insurers can handle. Then there's the economy, inflation driving up repair costs, medical bills, everything. Insurers are stuck between a rock and a hard place, and a lot of them just couldn't stay afloat. The result? People are getting squeezed. Small businesses are cutting back, families are dropping coverage altogether, and those who can't afford to? They're stuck with bare-bones plans that barely cover anything. It's a mess, and honestly, no one's sure how long it'll take to sort out. Florida homeowners know the drill. Hurricane season means battening down the hatches and hoping for the best. But what happens when the worst does hit? That's where Citizens Property Insurance steps in. It's the state's insurer of last resort. the safety net for folks who can't find coverage anywhere else. And let's be honest, in Florida, that's a lot of people. But here's the catch. Citizens isn't just any insurance company. It's backed by the state, which means if a massive storm wipes out its reserves, guess who's on the hook? All of us. That's right. Statewide surcharges can kick in, spreading the cost across every policyholder in Florida, not just the ones with Citizens. So even if you've got private insurance, you could still end up paying for someone else's claim. It's a tough spot. Citizens keeps the market stable, but it also means we're all sharing the risk. And in a state where storms are a matter of when, not if, that's a reality we can't ignore. So while it's there to help, it's also a reminder, Florida's insurance game is a team sport, whether we like it or not. So let's talk about what's happening in Miami-Dade right now. It's not just a trickle, it's a full-on exodus. We're talking about 67,000 people packing up and leaving in 2024 alone. That's a lot of empty houses, a lot of goodbye parties, and a lot of questions about why. Some say it's the cost of living. Rents are sky high and wages just aren't keeping up. Others point to the insurance crisis, where homeowners are getting hit with rates that feel like a second mortgage. And then there's the weather. Hurricanes are getting stronger, flooding's getting worse, and folks are tired of living on edge every summer. But it's not just about money or storms. There's a sense that Miami's changing, and not everyone's on board with the direction. Some are heading north, chasing lower taxes or quieter streets. Others are just looking for a fresh start somewhere else. Whatever the reason, 67,000 people is a big number. It's reshaping neighborhoods, shifting the economy, and making everyone wonder, what's next for Miami? And who's going to be left to find out? Governor Dantis stood at the podium, his usual confidence wavering as he addressed the press. The $1,000 rebate plan had been his flagship promise, a bold move to stimulate the economy and win over voters. But now, just months later, it was crumbling under the weight of poor execution and dwindling public trust. The plan was simple on paper: put money directly into the hands of citizens to boost spending and revive local businesses. But the rollout had been anything but smooth. Delays plagued the distribution, with some residents waiting weeks for checks that never arrived. Others received the wrong amounts, sparking outrage and confusion. Small business owners who were supposed to benefit from the influx of cash instead found themselves stuck in bureaucratic limbo, unable to access promised support. Investors took notice. The market, once optimistic about the governor's economic vision, began to sour. Stocks tied to local industries dipped as confidence eroded. Analysts pointed to the rebate fiasco as proof of deeper instability, and soon the ripple effects spread. Consumer spending didn't surge as predicted. Instead, it stagnated, leaving the economy in a worse position than before. Critics were quick to pounce. Opposition leaders called the plan reckless, a political stunt with no real substance. Even some of Dantis's allies distanced themselves, unwilling to tie their reputations to a sinking ship. The governor tried to pivot, blaming administrative errors and promising fixes, but the damage was done. The rebate plan, meant to be his triumph, had become a symbol of his administration's shortcomings. As the cameras flashed and reporters fired off questions, Dantis's answers grew more strained. The market's reaction was clear. No one believed in his leadership anymore. And without trust, even the best-laid plans were doomed to fail. The sun was shining, the palm trees were swaying, and for a while it seemed like the good times would never end. Florida was booming. New condos sprouting up overnight, investors snapping up properties like they were going out of style, and everyone talking about how real estate was the safest bet in town. But beneath all that glossy optimism, the cracks were already forming. See, it wasn't just about people wanting a slice of paradise. It was easy money, cheap loans, and a whole lot of wishful thinking. Banks were handing out mortgages like candy, and folks who couldn't really afford them were signing on the dotted line anyway. Developers kept building, convinced the demand would never dry up. And why wouldn't they? For years, prices just kept climbing and everyone figured it'd go on forever. But then the music stopped. Interest rates crept up, those adjustable rate mortgages reset, and suddenly people couldn't make their payments. Properties sat empty, foreclosures piled up, and the whole house of cards started to wobble. The boom had been built on sand. cheap credit, speculation, and the idea that Florida was somehow immune to the rules of economics. Turns out it wasn't. And when the crash came, it wasn't just the investors who got burned. It was the families who'd stretched too far, the construction workers left without jobs, the neighborhoods full of half-finished buildings that would never be homes. The dream had turned into a nightmare, and the only thing left was the question: how had anyone thought this would last? So, what can we actually do to steady this ship? First off, we've got to look at tightening up those regulations on high-risk trading. I'm talking about putting some real teeth into oversight. No more slapping fines that feel like a rounding error to these big firms. If you're playing fast and loose with other people's money, you should face consequences that actually sting. Then there's the issue of transparency. Right now, it's like we're all flying blind. If we had real-time data on market movements, not just the sanitized version that gets released days later, maybe we could spot the cracks before the whole thing comes crashing down. And let's not forget about the little guy. Retail investors need better protections. Maybe it's time to cap how much leverage they can take on so they're not gambling their life savings on a whim. But here's the thing. None of this works unless we've got leaders who are willing to make the hard calls. That means no more revolving doors between Wall Street and Washington. We need people in charge who aren't just thinking about their next lobbying gig. And yeah, it's going to ruffle some feathers, but if we don't do something now, we're just setting ourselves up for another meltdown. So, who's ready to actually fix this? So here's the thing. This isn't just a story we're telling. It's a conversation we're all part of. The choices we make, the voices we listen to, the actions we take, they shape what comes next. And that's where you come in. Stay curious, ask questions, dig deeper. Because the more we know, the better we can do. So don't just watch this and move on. Talk about it, share it, keep the conversation going. The future isn't something that just happens to us, it's something we build together. And it starts with staying informed and staying engaged. So what's next? That's up to you. Let's make it count. The housing crisis isn't just about roofs over heads, it's about stability, dignity, and the future of our communities. Right now, too many families are struggling to keep up with skyrocketing rents, while others face the nightmare of homelessness. This isn't just an economic issue, it's a moral one. When people can't afford a place to live, it ripples through everything: jobs, schools, even health. We've got to tackle this head on. That means building more affordable housing, yes, but also protecting tenants from unfair evictions and making sure wages keep up with living costs. It's about smart policies, not just quick fixes. Because when people have a safe, stable home, they can focus on building better lives. And that's how we build a stronger society for everyone. The time to act is now, before the crisis deepens and more families are left behind.